everyone, Nicole Leininger with Premier Sotheby's International Realty, and today joining me is Brandon with Cross Country Mortgage. We are going to talk about the steps a buyer will take to start the home buying process and how important it is to have a great lender by your side. Thanks for joining me today.
Yeah, thanks so much for having me, Nicole.
So, obviously a great place to start would be, what are the first steps somebody needs to take when they are looking to buy a home and want to get pre-qualified?
Yeah, certainly. So certainly the first step for the buyer is to get pre-qualified, and there's a number of things that go into that, starting with a conversation with a qualified mortgage expert. At that point, they're going to begin getting information, completing the application, which is going to in turn work on reviewing your credit report, your income, your assets, and then begin to tailor some mortgage products that you may qualify for. So it really starts with the pre-qualification and understanding what you can be qualified for, making sure your credit is approved, and going from there.
And I always say it's very important for somebody to get pre-qualified. Number one is, when you find a home you love, we need to have a lender letter with our offer, and that just simply tells the seller that you're qualified, we've started the process, and we will make it to closing, is pretty much what it says. And then also too, I want to be sure you're looking at homes that you can qualify for and something you want to buy. A lot of times people qualify for a lot more than what they actually want to spend. So it's whatever you're comfortable with that monthly mortgage payment.
Certainly, and I think there's a lot of things that home buyers aren't necessarily aware of when they're shopping for a home. Things like the property taxes and homeowners insurance, and whether or not the loan has mortgage insurance on it, any homeowners association dues. There's a lot of things that go into purchasing a home that the first-time home buyer may just not be thinking of. Mm-hmm. And so again, really having that initial conversation with a qualified mortgage expert to kind of introduce those numbers, those terms, and make sure that the buyer is well informed of what they're looking to do.
And so what are different types of loans for buyers? What kind of determines what loan is best for each buyer?
Yeah, great question, Nicole. So it really comes down to the borrower's price range, their down payment, and their credit score. There's lots of different products out there to meet the needs of today's home buyer. There's some government sponsored loans like FHA and VA, even USDA in certain areas that qualify for a USDA loan. And then there's, of course, conventional and jumbo loans too. Typically, the first-time home buyer is looking for an FHA loan. It allows for a lower credit score and a lower down payment, and so that's always a great loan for a first-time home buyer.
And you had mentioned VA, and I think that that's a great loan to explain, because a lot of people, some other agents don't exactly know the benefits of a VA loan and who qualifies for them and why somebody might use a VA loan. So could you kind of touch on that a little bit?
Yeah, absolutely. First, I think it's important to know that the VA loan has certainly substantially increased in the amount of people qualifying for a VA loan. Obviously, in the last 20 years, we've had some things that warrants veterans getting qualified for a VA loan, and it's really a fantastic product. Unfortunately, there's some misinformation regarding the VA loan. A lot of people think maybe it's a tougher loan to close, or there's issues with the appraisal, but those things really just aren't true. The VA loan is a phenomenal loan program for those who qualify. And there's really no additional time constraints from a VA loan to a conventional loan. So certainly something that we try to dispel that misinformation out there, because if someone qualifies for a VA loan, that's really the route that they should go, because it's a fantastic loan product.
Mm-hmm. Yeah, and I personally have my husband was a veteran, my dad and other family members, so I definitely love working with veterans and getting them the benefits that they qualify for.
Yeah, certainly. If we're not, helping out our veterans purchase homes, then I think we're certainly failing our communities, because again, more and more veterans are qualifying for VA loans, and certainly, I know you do, Nicole. I certainly believe in home ownership and the value of being a homeowner, and the wealth that it can create, and just the emotional impact that owning a home can make as well in one's life, certainly in a veteran's life.
So we've started the process. I've gotten my buyer connected with you. You've gotten all their needed information, and we go out and find a home. So once we go under contract, I know that, the earnest money and due diligence money is due. Once we're through the inspection process, what's happening behind the scenes for the loan? What are the steps once we go under contract?
Yeah, there's so many things that are happening there, Nicole. And on the mortgage side, we're doing things like verifying employment, waiting for the appraisal. We've ordered the appraisal to verify that the home is actually worth what someone is willing to pay for it. We're working with the attorney to provide all the title documents, make sure there's clean title, which means there's no liens against the property that our buyer could be unaware of. Mm-hmm. And then just working through all of the verification process, making sure that their income, the borrower's income, is what we had on the application, making sure they have enough funds for closing with, from liquid assets, things like that. So there's a lot of things that are going on through the underwriting process. And then also lots of third-party things going on. So there's just so many people involved when you're looking to purchase a home. I think on average there's 34 people involved when you want to purchase a home. And so there's just so many things during that process that you're managing on the real estate side, mm-hmm. that I'm managing on the mortgage side. And it's just unbelievably important to make sure when you're purchasing a home or even selling a home that you've got a team of very qualified individuals working on your behalf.
Mm-hmm. Keep everything in the right direction. And
absolutely, yeah, got to keep things moving. Because with so many people in the process, just one issue can slow down, can have a chain reaction. So making sure those things are getting done on time, making sure that you're working with great teammates, and so. Because there is so many things involved, and you don't want one issue to compound and become, a delayed closing.
Right. And something that comes to mind when you say that is I always remind my buyers when we're in the process not to make any big purchases. So don't go buy a car, do not finance furniture, just kind of lay low and keep everything as it is while we go through the loan process, and then that can kind of help make sure everything gets to closing with no issues.
For sure. Those 0% introductory rates for the furniture stores are certainly appealing, but just wait one day after closing.
Right. You can do whatever you want after closing. Right. And then also too, something else that came up, that it is a good idea to have a great team behind you when you're buying a home is, I had mentioned due diligence, and part of North Carolina's contract is earnest money and due diligence is due at time of contract. And the due diligence money is actually made payable to the seller, and that is a deposit that will come back to the buyer at time of closing, but that is at risk if they back out at any time during the under contract process. And so by having a good lender on their side, we want to be sure that the appraisal goes well, that they are pre-qualified before we even start the process, because we don't want any hiccups while we're under contract, because if they happen to fall through, that due diligence is made payable to seller, and it very well could not be refunded if they have to back out.
Right. Yeah. Now more than ever, buyers really need a mortgage representative to really understand the mortgage process, to understand, how to read pay stubs and bank statements and things like this, because you may be putting your entire net worth on the line just to be able to purchase a home with due diligence. Certainly I've seen some pretty astronomical numbers just to get the property under contract. And unfortunately I've had those situations where someone went with another lender, or someone, a local bank that really didn't specialize in mortgages, didn't quite know what they were doing, and then call me a week before closing and need my help. Because
you save this.
Yeah, and so we come through and look at the entire picture and see what we can do to make it happen. But it's just you're putting yourself at too much risk if you're not working with a mortgage expert in today's market. And so I can't stress that enough. Just don't go down to your local bank and and inquire about a mortgage. Talk to your real estate agents. Get who they're referring, get who they recommend, because while you may be purchasing your first home or maybe even your fifth home, a local real estate agent expert is probably working on their 5th or 10th transaction of the month. And so knowing and trusting who they recommend is really, really important. And then of course doing your own research. No shortage of things that you can research online to make sure that you are working with someone who, number one, has been in the business for a long time, has the experience. Number two, actually closes a lot of home purchases, and so has that experience plus the knowledge. It's just very important.
And I think it's very important that I have you on my cell phone. I can text you, call you at any time. I work the weekends, so I expect you to work weekends.
Right.
We never know when we're going to find that home. And so that's when I would need the lender letter. So it is nice to have that type of connection and relationship, because sometimes depending on if they're using a big bank or, out of state, who knows? If it's a 1-800 number, you don't know who you're going to get in contact with and when that person's going to get back to you. So in today's market with bidding wars and whatnot, things need to move very quickly.
Yeah, I get the call quite often, a Saturday at 6 o'clock. Hey, I couldn't get a hold of my bank. Can you help me out? I'm like, sure I can, but let's talk about other things too. Like what happens, when you're faced with your closing and you can't get a hold of the bank. What happens then? So a lot of these things that are red flags up front are going to be red flags throughout the process. If you can't get a hold of your mortgage person, you should be making some other calls.
Right. And the goal for everyone is to make it as seamless as possible for the buyer and obviously get to closing.
Absolutely.
So once you go through the appraisal process and underwriting, typically when will a buyer know what they need to bring to closing for a down payment?
Yeah, I think most, a good mortgage company is going to be able to have a really, really almost 100% accurate number really early on in the process. There's going to be some tweaking, maybe you did some additional inspections, maybe you didn't do any inspections, but a good mortgage company is going to be able to provide a really accurate number up front. And quite frankly, if anything changes, that's a red flag.
Yeah.
Now, but it's nearly impossible to be 100% accurate up front, because the day that you close is going to change the numbers a little bit. So once the closing date is firmly in process and we've got all the title documents from the attorney, we've got all the inspection requests and invoices, typically at that point, we're able to set a final number, which usually comes about a week before closing, that we're able to lock in the final amount that the borrower needs to bring to closing.
And then we'll be able to review the numbers and they can wire it so everything's ready for that day.
Yeah, and so the closing disclosure has to be disclosed with 3 days prior to closing. And that's something that, again, some mortgage companies just send it out, hey, sign here, but we want to go line by line with our clients, really detailing and disclosing every cost of the mortgage, their escrow accounts, what that means, going through that, the insurance, the taxes, prepaid interest. All these are numbers that, no one really sees on a daily basis or even a yearly basis. And so we really like to educate, to handhold, and to go through these numbers, line by line with our home buyers to make sure they understand all of the numbers, where they're coming from, and then to feel comfortable about the money they're spending to get their new home.
So we've talked about some different loans and the process, but what do you look at when people call you to get pre-qualified? Is it incomes, credit scores? Is there anything such as stated income anymore?
That's a great question, and I'll start with saying that home buyers really aren't aware of certain things in the mortgage process and what we're kind of looking at. So, oftentimes I'll have, when we do the application, we're basically just taking the borrower's word. Hey, I make this amount of money each month. I've got this amount of money in the bank. But once we begin to document these things, we can maybe find some red flags, or just we're verifying the information that they gave us. And one of those things is mortgage qualifying income versus maybe income the borrower actually makes or thinks they make, things like that. Mm-hmm. And so that can really be a big issue. Again, working with someone who understands mortgage guidelines, how to calculate mortgage income. You may have a self-employed buyer who, maybe has gross revenue of $100,000 and they I make $100,000 a year, but then you evaluate their tax returns, and mortgage income is the qualifying side is looking at the net income after all of the deductions. And so the mortgage qualifying income could be substantially less, and that person may not qualify. Likewise, maybe if someone who makes $20 an hour, they think they make $20 an hour, but maybe we get their pay stubs. Maybe they've only been on the job for 6 months and they took a few weeks off unpaid. Well, the mortgage qualifying side, we're actually going to calculate that income differently. We're going to take a year-to-date average, which is going to be a lot less than that $20 an hour. So that could be enough to flip their approval, or they're going to qualify for a less amount on the purchase price. So it's things like that really come into play when we're verifying information, things for home buyers to be considered of. And so again, working with a qualified mortgage expert who understands these things, knows that the application needs to be documented, and get those potential red flags out of the way.
So you mentioned the application could be more like the honor system. Do you ever collect those documents or ask for verification of employment or pay stubs before, let's say I take them to go looking, or providing a lender letter, just to be sure that they make what they say that they make, so for
sure.
Qualification purposes?
It's definitely part of our process, where most mortgage companies, they just take the application, they pre-qualify someone, and then they kind of forget about it until maybe they get a contract.
Based off of what somebody might just say.
Right, and so the pre-qualification process is just the home buyer, filling out the information, I make this, I've got this in the bank, but the next step, which is to get fully pre-approved, is for that lender to say, okay, hey, I need these documents, your pay stubs, W-2s or tax returns, depending on the application, and actually verifying this information. I can't count how many times that the lender, in certain cases, doesn't go that extra mile to document these things. They go into contract because they've been pre-qualified, and now they don't qualify.
And I honestly prefer a pre-approval, so several sellers or agents may or may not know the difference between a pre-qualification or a pre-approval, but I prefer with my buyers to have a pre-approval letter, because that is telling them that you've documented everything, you've looked at and verified everything, so there should be no issues.
It really is a big difference. It seems maybe minor, but it's a very big difference. Knowing that the home buyer is well qualified, they're going to go to closing. And lots of times, when I have clients that are making an offer, I have the listing agent reach out to me. My name's on the pre-qualification letter, the pre-approval letter, and they want to know, hey, how qualified is this person? Have you received their documents? Have you sent them through underwriting? And so, if you're looking to purchase a home, that's a step that you need to be taken with your mortgage lender. And if they're not taking it, you may want to look somewhere else, because it is a very important piece of the process. Going back to our due diligence conversation, you got too much money at risk not to do everything you can to ensure that you're going to go to closing.
Right. And that's something that you and your team and your company have done for me in the past. In today's competitive market and bidding wars, once I write an offer and submit an offer, you reach out to that listing agent to introduce yourself, give them your past and your history and how many deals you've closed, just so that they know as a team we can get the job done.
Right. Yeah. The home sellers and listing agents, want that warm and fuzzy, that
the personal level.
Right. And so multiple offers. They want the best offer, but they want the offer that's going to go to closing with no hiccups, no issues. And so to be able to have that conversation up front, give the warm and fuzzy to the listing agent, and make sure that the client is well qualified, and we're gonna go to closing on time and efficiently.
So to just wrap up everything that we've talked about today, obviously the most important step is to get pre-qualified, and that is always the first step I have all my buyers do, just to be sure we're on the right path. And then once we find a home and write an offer, you will reach out to the listing agent. We provide that lender letter, and then the whole process of being under contract starts.
Right.
The earnest money and due diligence money is due within, typically it's about 48 hours after going under contract. And then I schedule the inspections while you start everything on your side. The underwriting, the appraisal, whatever other information you need from the buyers.
Right.
And then obviously we make it to closing. Typically that time frame from contract to closing, typical is about 30 days, I would say, is an average. But I know that you have some options that if people need to move faster, you could possibly do it in, 21 days?
Yeah, our average closing time is 21 days, and so we can typically move very quickly if we need to, and sometimes we need to.
Yeah.
And I think it really starts at that pre-qualification process, kind of outlining the process for the home buyer. And obviously they're not doing this every day like you and I are. They may not do this every year. They may only do it every 10 years or 5 years. Who knows? But when we have that initial conversation, we really go to great lengths to kind of outline what the next 30 days on average is going to look like. And so to kind of set the expectations for this happening, and the appraisal and the title and the underwriting, all these different things that are coming into play, home inspections, things like that, setting the proper expectations, and then really informing the client, educating the client for everything that is going on. I think most times when we do that, the client's really blown away by how many things are happening behind the scenes that they're just not aware of. And quite frankly, if they never see it or feel it or understand it, I think we've done a great job.
Right.
Because sometimes those things are missed, they're not done well, or issues are created, and now the home buyer's aware of it. So we really want to educate the client on the front end, let them know everything that's happening during the process. But then if they never have to kind of experience anything else, we've done a great job, and that's certainly our goal.
Right. And it's nice that you have that flexibility as far as you could close as early as 21 days, or some might take 30 to 40 days, because in today's market, we have to pretty much accommodate the seller and whatever the seller wants. But if they want a quick closing, we can be competitive and close quickly, or if the seller wants a typical time frame, we can do the normal 30 to 45 days. So it's nice to have that flexibility and also do whatever works best for the buyer as well.
For sure. I get that question a lot. How quickly can you close? And typically my answer is as quick as you want.
How quick can you get your information to me?
I need X, Y, Z. Let's get the ball rolling. And in today's market, I think one thing we haven't touched on is appraisal waivers.
Right.
A lot of times in our market, if you're putting at least 10% down, you've got a good chance to get an appraisal waiver, which just means that we don't need an appraisal on that particular home. There's so much information and data out there where as long as the home price is in kind of in a range for some of these online valuation models, that we're going to get an appraisal waiver. And so without an appraisal, we can close very quickly.
And do you ever know, like you said, if they're putting at least 10% down, do you know if you can get that appraisal waiver at time of contract, or if that's once we're under contract and the process has started?
So it is property specific. So once we put that property in our system, and we've already got the application, we add the property address to the application, we run it through automated underwriting, and it'll let us know if the property receives an appraisal waiver or not. So we can know, the same day as the contract.
And that's really good to know, because again, in a competitive situation, that could really give the buyer the upper hand if they're pretty much saying, we already know we don't need to have an appraisal.
Absolutely, yeah. If you got someone who's putting 20% down or 5% down, 5%'s not typically going to get an appraisal waiver.
Right.
If you're putting 20% down, you've got a great chance to get an appraisal waiver. So those things do come into play for sure. And which can add a lot of value to the seller if they don't have to worry about an appraisal value.
Right. Well, Brandon, thank you again for joining me today. You've provided a ton of value to anyone that is looking to start the process or buy a home. Please let everybody know how to get a hold of you. Yeah,
thanks so much for having me, and always great to share information to potential home buyers out there. So cell phone is best for me, Brandon Colberg, 704-999-6646. Call or text anytime. Again, it's 704-999-6646.
And again, I'm Nicole Leininger with Premier Sotheby's International Realty.
And I'm Brandon Colberg with Cross Country Mortgage.
Whether you are looking to buy your first home or your next home, we are happy to help.